All right, and welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. You can find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets here today, again, mostly a quiet week. And we are starting to float up here on Friday afternoon, and we're closing right near that 4,600 handle. So we talked about that area. We had the little double top there, and now we've kind of consolidated beneath that level. We did get non-farm payroll data out this morning, and that number came in a little bit slightly hotter than expected. It wasn't ridiculous, but unemployment, the kicker was the unemployment rate did downtick from 3.9 to 3.7. So that's actually a pretty big move, but we're not really seeing the stock market react all that much. We can take a look at yields here, and on the 30-year, TYX up 1.65% there. So yields are getting a bounce here. And we'll talk about them in a minute here, but we're not really seeing the market put under pressure. A lot of this has to do with seasonality and the fact that we're going into, in my opinion, the fact that we're going into an options X week next week. It is a quarterly options X, and it is December, which is the largest OpEx of the year for equities, because there's leaps involved, right? So it's going to be a week where I would be a little shocked if the market had any sort of major decline or uptick for that matter. I mean, I think that for the most part, we would remain mostly range bound. Doesn't mean we can't, have another push up into the 46.37 area. Again, that is the next big level on the SPX. So we can see it right there. That was that pivot high from March of last year. And that would be pretty major at this point. On the downside, again, we still got to get through, 45.37. We got to get through the 20 MA. We got to get through 4,500. So, I mean, if we could pull back, it's certainly not out of the question here. I mean, we are still a little high on the hog, but for the most part here, I do think that we'll probably be mostly range bound. And again, another thing you have to consider is as we get closer to the end of the year here, get closer to Christmas, participation is going to dry up, right? So everybody's kind of made their positioning for, or at least they're starting to make their positioning for next year. And so we're going to see volume really dry out as we get closer to the end of the year. So again, we're not expecting massive swings. Now we do have CPI next Tuesday, and then we have the FOMC next Wednesday. So those will be market moving, certainly will be market moving. And I think that would probably be like the rest of the volatility for the year is going to come from next week, maybe a little bit in the week after, but just be aware of that. We are starting to wind down volatility wise here as we get closer to the end of the year here. But again, market's still kind of holding up here, and we talked about Santa rally and stuff like that. That's still being front ran here. I think a lot of the gains have been pulled forward, to be honest. That doesn't mean we can't go a little bit higher, again, especially if we get a weak CPI, markets might like that. But right now, again, we'll just take it one day at a time here and not try to get too excited about any sort of moves here. And, as the year winds down. But anyways, SPX right at that 4,600 handle. We can take a look at the triple Qs here. Again, same pattern. We had a little bit of a dip earlier in the week, and then we came right off of it. So no real follow through from bears. If they had broken this level here at 383.18, especially on a close, that would certainly open the door for the gap fill, and then possibly down into the 370 area. And really the same goes for the spiders, the SPX. If we had taken this little pivot out here on a close, I think 4,500 minimum, and then we could get down to 4,450, but that does not appear to be in the cards right now. And right now the pattern on the Qs is fine. There's no real problems. And I'm just going to say the next level here, if we continue up, is right around 400. So that was your weekly breakdown bar from January. And then, of course, the all-time high at 408.71. So that is what I'm seeing here in technology. But again, market's holding up here. And again, we'll leave it at that for now until they tell us to do otherwise. IWM here, so Russell 2000. Again, pattern-wise, no problems. We had a pretty big surge on Monday, so a little bit of continuation from Friday, and then just kind of pulling back throughout the rest of the week. Again, this 20 moving average catches up. I think this can still get to that inverse head and shoulder target right around that 189, maybe even 190, 191 area on the IWM. But again, no problems there. And again, we're seeing a lot of short covering in small caps. A lot of end of year stuff going on here. People trying to front run the next sector that's going to run, and so on and so forth. So you're seeing a lot of money flow into small caps and into beaten down plays. We'll also see some January effect plays come into play as well, I think. A lot of things that got beaten down this year, financials, stuff like that. After that tax loss selling is over with, sometimes you get a bid into late December, early January. So those things could certainly be on the table. And I think we're seeing some of that certainly with the Russell 2000 right now. But again, decent week there for the IWM, just a little pullback after a big thrust last Friday and then into this Monday. Dow here continues to hold up. I think the Dow is way overdone here. Even more so overdone than the Qs and the spiders. We only just started consolidating here on the DIA. There's nothing to say it can't go higher, but just be aware that this is now parabolic here, especially on the daily. So usually these moves end with a parabolic move up. Oops. Parabolic move up usually ends with a parabolic move down, so just be aware of that. But right now the trend is up. Yes, it's extended. It's trying to consolidate this move. Again, could get to 365 and then maybe double top there. But I think this is the type of move when it corrects, it's going to correct hard. I don't know if that's going to happen right now. Again, we're going into end of year. I'd be surprised if we had any sort of major downside. But again, Dow hanging in there okay, and you got a little consolidation pattern there on the daily, so we'll leave it at that for now. Semiconductors here up 1% today on Friday, so a nice little retrace into the early part of this week, and then a little bit of a bounce off of that previous level. So that 156.59 area, that was a pivot, and then we sold off into October, November, and now we're back testing it, and semiconductors hanging in there. There's nothing really wrong here with this pullback pattern, and I don't see any problems out here. AMD did announce a new AI chip this week, and that obviously was a catalyst for the semiconductors to move higher. IGV here also holding up. No problems here. The only issue I have with it is you have a gap here, and this is kind of an island. And, if you get any sort of volatility, it can go down pretty quickly. But overall, the pattern is fine. We are now into this red bar high, as well as this 75% retrace on the weekly. So I think the IGV here needs to do some weekly consolidation. In fact, that's what it's trying to do right now, just a little inside pattern there on the weekly time frame. But for right now, no real problems. And again, if this moving averages start to catch up, there's nothing to say it can't go higher, but just be aware of that little gap there. And there's another one right here too. So if we do start to roll over for any sort of reason, those would be your logical targets there on the downside. Dow Transports here again, same thing as the Russell, right? Up Monday and then just kind of pulling back here. No real problems. You do have an inverse head and shoulder there on the Dow Transports. If that can play out, that would take you up to, I'm just going to zoom out to the weekly here. That would take you, basically back to double top, right? Just a pierce of double top there. If you close below this blue trend line here on a daily, this is a daily chart pattern, then that's a failure. We're just not going to look at it anymore. That doesn't mean it can't go there. It just means that we're no longer relying on that pattern. That said, you have an inside bar here on the daily, and you're pulling back. There's no real problems. If this can push higher through 15.6, then it can go up, but that is resistance right now. And again, no problems with the transports. They're hanging in there just fine at the moment. All right, let's flip over here to interest rates. So this is what I find interesting here. And we're going to start with, there's the dollar index, but let's start here with the 2-year. So the 2-year here today, again, unemployment downticked, remember? So that is not something that market wants to hear about. The market wants kind of Goldilocks, slight uptick in unemployment, slight uptick in jobless claims, etc. Not anything super fast on either side, but it wants a slight uptick. So that was the opposite. 2-year Treasury note here. This is the yield. You had a nice red bar, and this is kind of pushing outside of that. So the 2-year may be pushing back up to 4.8, maybe even 5% here in the short term. So we talked about this level. We spiked it last week. We closed below it, and now we're starting to drift back up. So if the 2-year can catch ground, and again, same thing with the 5s and 10s. Take a look at this trend line here, going all the way back to 2021 on the 10-year, coinciding with that pivot. Look at the 30-year. Same thing, pivot, pivot, pivot. Decent levels here. So if we can get bounces in yields, I think the market will eventually have to respect that, and the market may have to pull back here. Again, my only caution there with playing this is that I wouldn't expect a ton of a pullback here in front of Christmas, right, in the markets. Could it be tradable? It's certainly possible. I think the yield is certainly tradable here. But that's kind of your case for bears here over the next couple of weeks. And then we're going into the FOMC as well, and you have to figure if you were long bonds here and you made some money, might be a good idea to start covering. You got to move from 5% down to almost 4% on the 30-year. You got to move from 5 to almost, same thing, 5 to almost 4 on the 10-year. You're probably covering, taking some profits into that before that Fed meeting. So no need to risk it there. That does make sense here. But I do think yields are interesting here. And 10-year, could get back to 4.4, maybe 4.6 if we really get a pop. 30-year, 4.5. Again, if we really get a pop, I'd say 4.75. And then these are just near-term targets. This isn't a long-term projection, but, maybe over the next couple of weeks to month or so. So I do think yields are a little overdone to the downside, likely going to get some type of a bounce here. All right, XHB, new all-time high for the home builders here. So again, market's really liking the move here in yields. So obviously yields down ticking, XHB getting a huge uptick. We had that bull pattern a few weeks ago, and it started to break out. And XHB has probably been one of the strongest sectors this week. Take a look at Monday, little pullback Tuesday, Wednesday, Thursday, Friday. We're right up, and we're going to close at a new all-time high and an all-time closing high to end the week here for XHB. Same thing with the ITB. So home builders rip-roaring to the upside here. I think they're a little overvalued here, but chart-wise, there's no problems. Maybe a little overbought, but I'm not going to fight it here as, they're really a powerhouse here. Until the market tells us to, if we get a high-volume sell-off, then that would be an indication of a potential top. But right now, XHB has been a tank here. VNQ, again, kind of like the Russell and the transports. Decent day Monday, a little pullback here. If this can pull back more, I think it could have another up move. But again, we went into some resistance. Look at this area. We had a sell-off. In fact, it's a little bit easier to see on the weekly. Down move, chopped around, you retraced. That's where the buyers are trapped, right in there. And that's where we're stalling out. So again, if this does some consolidation here, it can push higher. Wouldn't want to see it lose that 200 moving average again, as then that would leave it a little bit more vulnerable. But right now, VNQ hanging in there, and pattern-wise, it's okay for now. XLF also stalling out again. We talked about this level last week, 36 and a quarter, and that's where we're stopping out. So not stopping out, but that's where we've stalled out. In any case, nice little pattern there on the daily inside of that green from Monday. And letting that moving average catch up. So again, financials. Again, I think a lot of this. I mean, we talk about the KRE. A lot of this, sector that's been beaten down. So you got tax loss selling going into Q4, and now that's selling. As that selling pressure starts to abate, you get kind of a float back up. So I think that's a lot to do with it here. But in any case, pattern is a little bit better here. Still a lot of resistance up here around 49, $50. But the KRE is holding up, and that is helping out the Russell 2000, a lot of regional banks in that. KBE here, large bank ETF above that pivot. I'd say the next level right around 44. So I'm just going to call it right there. So those pivots right in there and there. And that's kind of your next big level there for the KBE. But again, nice little rally here for the banks. Broker dealers, that's going to 522. That is not a short level. That's just an upside objective. Inverse head and shoulders is playing out pretty much perfectly there on the XBD. All right, let's get over to commodities here. So crude up 2.65%. It got basically to my level. I did not take this. I was looking for it to get a little bit lower here. Like I was hoping for 68. We didn't quite get there, but we're getting a bounce. So it's up, 3-4% in the last 2 days. I'm going to give this the upside bias to 74, 75 right now. A strange tailwind for crude right now is I don't think policymakers want this breaking the lows. And you might say that doesn't make sense because the market wants lower crude prices, it wants higher unemployment, etc. But if crude were to go into free fall here, that would freak the markets out. You would hear nothing but hard landing, recession, depression, hard landing, margin call. That would be all over TV. They don't want that. So I think that you'll see some defense here. And besides, it's a good area of support anyway. All those buyers or all those short sellers there that tried to push it down got smoked. That's where buyers stepped in. You also have the weekly 200. So this should be a good level here. But again, I think policymakers, at least right now, definitely would not want to crash in oil prices right in front of Christmas. You don't want CNBC blasting hard landing all over TV while people are going out shopping for Christmas gifts. So I think that right here cyclically it makes sense, but and obviously the chart makes sense as well. But short term, look for 74 to 75. If it gets through that, it'll go back to 80. XLE here getting a nice bounce today after slicing through my 82 level. I still am not in love with this right now, so I'd like to get this cheaper. You got a weekly bearish inside bar. We can get rid of this now. Weekly bearish inside bar, and it's starting to play out, holding the 100 moving average for now. I still think this wants to go lower, and I'd like it to go lower as well. I think we can get it cheaper. Same thing with XOP. It did get to our trend line. It got there. We got a one-day bounce. I'm not in love with it, though. I would have preferred it to go down like that in a straight line. I don't like the consolidation before that, but it's getting a bid there, and we'll leave it alone for now. OIH is very interesting. I like it around 280, so we'll see if that can get there. It does have a little support here at 290. It may retrace a little bit, but I think 280, 275 is a much better level there. CCJ, so uranium holding up okay. Nothing's changed there, just a little pullback. You had a little pop there last week, and then we're just kind of retesting it. Again, no problems. I would say if this breaks 42 and closes below 42, it's in correction mode. Until then, the trend is up and it can go higher. Next level, I'm just going to say $50. I think I said that last week. Just be aware that every fund manager in the world is chasing this thing right now because they're trying to meet their benchmarks by the end of the year. So buy at your own risk, basically. I would not chase it up here. The monthly is parabolic, so it is due for pullback, and typically the way these parabolic moves end is they go down parabolic too. I'm not saying CCJ is going to crash or that it's a bad long-term investment. Just be aware that you can get steep corrections in commodity producers. I've seen it before firsthand. All right, URNM, same thing, but this chart is a little bit more cleaner. It's not as parabolic on the monthly, and I think this can still get to double top, but no real issues here and no real change from last week. Another area I want to talk about here is wheat. I haven't brought this up in a minute. Full disclosure, I am long wheat right now, but we had an outside move last week. And you're going to see here this red bar, that was that breakdown from late September, and that ended up essentially being the low. Then we stayed inside of that consolidated bear flag, and then last week we ripped up and closed above the high of that red. That gave me a buy signal on this. Of course, I was already long anyway, but wheat has really come off the lows here, and I think this could be, and I talked about this before, this is a massive level of support. If this really starts to get going, I think wheat can get up to 7, maybe 725 in a pretty short order. It doesn't mean it can't pull back here. It probably should. You're into the 200. You've had a big pop off the lows, so consolidation is warranted. But I really like this level here for wheat, and that has acted well off the lows. Another one I noticed too is corn came off the lows and consolidating as well. Nice kind of similar outside move. Just some things to keep an eye on. I'm not saying corn's necessarily a long or short here, but definitely wheat I do think is very interesting at these levels. Nat gas came in again this week, basically flat here on Friday. We're right into that 250 handle again. That's kind of where buyers stepped up previously. This thing has been, seasonally, this is kind of what we come to expect here, but definitely a pretty steep decline there. But we'll see. That weekly chart here, maybe buyers step in next week. It is very oversold and due for a bounce, but we'll see what nat gas does. Again, kind of just flirting with that 200 MA, but a little bit of a bounce off those levels. And again, we'll see what that does next week. Dollar index here. So again, dollar holding up, and we had a little bit of a dump yesterday. The yen caught a huge bid against the dollar, and that took the DXY down. DXY right back up today. And if you can get through 104.35, well, yeah, 104.35, I think this can go to 105 and maybe even 106. It's certainly, we can't rule it out. So dollar here, we got down. I talked about this level. Right there's your 618. I mean, you can't draw it up any better. There's a bull flag, previous support level. We tagged it, tagged the 618, and then you're getting a bid. So charts behaving picture perfect there. That's how you draw it up. I don't have a bias on it. You know, if it consolidates and flags up, then I'd say I have a short-term bull bias on it. If it rolls over, it's going to go right to this trend line. So right around 101.50, 102. So pretty easy charting there. But yeah, dollar holding up okay. And again, market not bothered. Again, seasonality matters. Same thing with yields getting that bounce. We talked about the 30-year, 2-day bounce, and the market unbothered right now. So just be aware of that stuff. All right, on to gold here. So everybody needs to know about gold, of course. So on Sunday night, this was a margin call. Just a short seller or several short sellers blowing up, right? I did tweet about this a bunch of times, but actually, let's use a 10-minute so you can see the exact move. So futures, Globex opened, and we cracked the all-time high, and then what happened is somebody, group of funds, whatever, blew up. Not blew up, but their position did, and they all covered at the same time. And what happens is it comes right back down. So when a short seller covers, it's creating buy orders, right? Buy to cover. And as soon as that short seller is done, that artificial buy liquidity dries up, and then there's nothing left but sellers. So they come back down. Did it get whacked as well? I'm sure it did. I'm sure. Look at the volume here, right? By the way, don't fight this right now. So you see that volume? That's 368,000 contracts. Somebody with a lot of money wanted this lower. So don't fight it right now. Let it come back in. We did just fill the gap finally there at 2014. I told you guys we had a gap to fill, by the way. So hope you didn't chase it. But you know, you'll have some support around 2,000 psychological level there. The big level here in the near term to me is right here, 1950. So right there, that's where I'm looking for gold to go. And then we'll kind of reevaluate it from there. But nice little retrace there on gold. You know, a little bit of euphoria in the system, and I think it is getting worked out right now. Same thing with silver. Look at the weekly candle here on silver. This is unbelievable. Huge outside move down. Again, don't fight it here. It's telling you it wants to go lower with the volume and the price action. So let it come down, and we'll get to better levels in on this. First major level, you have some, I would say first major level right here is 23. 2250 should be good, and then 22 is your big support. So we'll be watching that on the way down. But again, don't fight these things right now. Let them come in. Somebody's telling you, this is the market's way of telling you that somebody wants it lower. That's massive volume. Don't fight that. Platinum here, got really close to my buy level, didn't quite get there, and we got a bounce. I still think this can come down, but platinum holding up okay, and again, showing relative strength versus gold and silver. I think that tells us a lot there. I do think it is put in a macro low. Palladium is a little bit on the weaker side. Again, I think long-term accumulation is fine here, but I can't rule out some lower prices in the meantime. Copper here, saving the week here over the last 2 days, 1, 2, 3 down. We retagged that trend line, and then a big bid the last 2 days, and now we're just kind of stalling out here. So I'm just going to be neutral on it. A little test candle here and an inside week altogether. I'm not going to say copper can't go higher because, we had a nice balance off the last 2 days. I'm just going to just throw my hands up and say, let's give it the upside bias to 4 for now. Okay. If it can get through 393, we'll give it the upside bias to 4. If you take this low out, then lower lows are potentially on the table for copper. But again, until then, we're just going to be neutral-ish on it. All right, on to Bitcoin here. So Bitcoin, interesting day, interesting week here. So we did have a nice push up again, and then we had a little bit of a dump intraday here. I believe this was on the NFP number. So a lot of things got liquidated, but came right back. I think I told you guys 44,000 last week. If we get up there, we are there. We've been there. And the next level is really about 48. So that's going to be that pivot high right up there. I'll zoom in on the weekly so you can see it a little bit more easily. But right up there. So that's going to be the next big level. Now, just be aware Bitcoin is still very overbought. Look at the weekly. We had no pullbacks the entire way. But I still think it can get there. I told you guys the pattern on ETH was very nice. I like that to 2,400. We almost got there today, basically. Close enough for government work. Nice inside bar. And that is held up. But again, Bitcoin can go higher, and until we get a sell signal on it, meaning a high volume sell off, it is still, in rally mode here. So anyways, again, let's flip back over here. So just take a look at this SPX. Markets here are acting well. Again, we're coming into some seasonality. I do think that yields could potentially cause some sort of a pullback here into maybe next week. I just don't know if it's that tradable, right? So maybe we even come up into this area and then we just pull back to 45.50 or 4600. So again, I wouldn't try to fight this market here just yet. Again, you're coming into seasonality. There's a lot of things going on that happen end of year. Participation starts to drop down. And we have CPI and the FOMC next week, so that is a little bit of a wild card. Again, we're going to give the market the upside bias until, again, like I said, we get a high volume reversal. Then things can change, and the market's telling us that a near-term top may be in place. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on conovertrades.com. I'll talk to you guys all next week.